Welcome, Noam. How are you?
Thank you. I'm doing pretty well.
Nice. So first of all, it was a pleasure to have you here. The idea for this kind of series of call is very easy. I would like to get in touch with people that are inside this industry that comes from the very different background inside the fintech market or the VC industry, and get a touch of what is happening out there in the market. So first question, very quick intro of who you are and what you're doing at Viola Fintech.
So I'm Noam, and I'm a partner at Viola Fintech. Viola Fintech is a global fintech-focused VC fund. And maybe what makes us stand out is that we're three partners who've been building and scaling fintech ventures for much longer than we've been investing. And so we like to bake in that operator perspective into everything we do. And yeah, we're based in Israel and investing across US and Europe.
Okay, nice. So, how did you actually land here? I mean, what's your like profile, your background? How did you actually landed in the VC industry?
Well, I didn't start as a VC, and I actually got into fintech by accident. So I was working for a large telco, focused on developing new ventures, and we decided to build an e-commerce marketplace, which was pretty cutting edge at the time. I won't reveal how long ago that was. And through that experience, I got an offer to join PayPal. And
Nice.
this is going to sound very weird and non-reliable, but I actually fell in love with payments and fintech in general. I was considered to be a payments geek at the time. So that's how I started my journey. And at some point, I just felt like if I want to get serious about fintech, I need to work for a startup and understand things, from the ground up. And so I had the opportunity to work for two early stage startups. One of them called Zoos, which developed a
Mhm.
payments operating system for PSPs and was sold to PayU in 2018. And the other one is Forder, which in my mind is one of the companies that really created a revolution in the fraud prevention space.
Hmm.
Um,
That's a very interesting topic. I mean, recently we have been talking and investigating the fraud prevention, let's say, topic very frequently with many different kind of startups. There's a huge trend going on for mostly in the cybersecurity sector about it. So that's for sure a very interesting topic. So I think that what's more interesting here is the fact that having the experience as someone who also worked for a startup really gives you an advantage in this kind of industry, because I think that most of the time you have a lot of investment manager that are coming from a different kind of backgrounds, like investment banking or private equity or similar, but I think that kind of experience is really giving you an advantage here.
Yeah, I think so too. I think, for sure it's a different perspective. And I think it makes it easier for me as an investor or a board member to connect with founders and understand what they're going through because
Mhm.
we like to call it like, some people just look at the world from the lens of the spreadsheet and haven't really been there to fire employees or hire employees or lose sleep over what's going to happen with the company tomorrow, and is this customer going to go live in time for raising the next round, and all of those concerns that we know that kind of make up the complexity of being a founder. And I think that just lets me understand it in a more comprehensive way.
Yeah, everything is easier in Excel. Everything turns out to be positive in Excel. But yeah, let's say coming back to the fintech market itself, how did you actually live the last 2 years? Because we are coming from a very tough period after the downturn and after the cut in interest rates and everything else. There was two very tough years, mostly for startups, but also for VCs and for investors all over the place. So how did you experience the last 2 years?
So I think the last 2 years were kind of the starting the recovery and kind of welcome to the new reality. So I think it was challenging in a way, but also there have been some great opportunities. If you look at it, I don't think the essence of fintech should change that much, right?
Mhm.
Because at the core, financial services need to be transformed, right? The world is changing, people's needs are changing, the way we look at data is changing. And so the need is still there. And having people that are trying to solve problems, that's something that still exists. I think, the way we look at it is if you go into the fintech space, assuming that interest rates are going to stay the same forever, you're not in the right area, right?
Yeah.
So it's not a reasonable assumption to begin with. And so I think with those challenges, we see that the strong founders that are there for the right reasons. And we see people that want to kind of adjust things and kind of modify the company culture or, the way they conduct themselves according to the new reality. And I think, that seeing that resilience and flexibility helps you see the really interesting companies and the really strong founders. And that's something that you can't really see when everything
Mm.
is going great, right? You usually see
Yeah.
it in a crisis.
Yeah, I also believe that, time like this really shape people because you have a lot of the things happening at the same time, and you see, the one that are truly resilient that can find out, the solution, the real solution to problems and everything else. And those are the best founders in my opinion, the one that are really resilient, really creative in finding solution, in finding a new way to solve problems, and it's amazing. And yeah, but and in the upcoming, in upcoming months, quarters, and years, which are the trends, that are you following right now? Because recently, for example, I've been following a lot the cybersecurity space. Of course, linked to fintech. The wealth management space, I think, is like very, very interesting more recently. Of course, how can you not mention AI, because it's basically all over the place? But which are the trends that are you following more closely at the moment?
So I think you mentioned cybersecurity, and I think trust in general is kind
Mm.
of a concept that's being redefined all the time.
Mhm.
The world is changing. You can take it to the philosophical angles of the geopolitical situation, and I think just the ability to trust. And my partner wrote something about it of like trust between the financial institution and the customer, trust between the regulator and the financial institution, trust between, like vendors and customers among themselves. And so I think that whole flow of trust is very interesting, and there are new opportunities all the time. Um, I did some work on the opportunity around embedded finance,
Mm.
which I think is is very exciting.
Yeah.
And we've actually developed our perspective on the space. And the way I see the evolution of embedded finance is as contextual. So
Mhm.
contextual finance and basically the huge value is when you embed an offering that is contextual to the distribution platform and serves the same intent, rather than just
Mm.
saying, here's a product, here's free distribution. The user kind of doesn't really understand why you connected the two. And so I think for contextual finance, which actually, we did a deep dive and created a map and everything, and maybe like one example is in the insurtech space. You see it a lot.
Mm.
You see, you want to book a flight and then you get the offer to add on the travel insurance. Or, we have a company that does insurance for Uber drivers, and the product is being offered as they onboard on Uber's platform to become a driver. And so those areas I think are really interesting of how to create smart user experience flows that leverage distribution platforms. Another super interesting area that I'm looking into now is kind of AI in finance or co-pilots for finance teams. And I think AI is really, as you said, is so hyped, and we talk about it all the
Yeah.
time. And it's really about differentiating the opportunities rather than just saying, oh, this is AI for something. If we look specifically at co-pilots and co-pilots for the CFO stack, so that's where you say, I'm going to empower the finance teams and help them be better rather than I'm going to replace them. Or, we look at kind of a cheaper, faster, and better, where the interesting one is obviously the better. Is if you can let them take their work to a whole new level of professionalism and see things that they weren't able to see before. So I think that's another area of focus for us these days.
Now, those are two very interesting concepts, in my opinion. Let me talk about the first one first. When you say context finance, you basically mean going from a higher level, basically a more generic level, when you have a platform that serves many different kind of topics, to very, very granular use cases. The one that you said about booking a flight and having the insurance related is a very good example. But we can see many different kind of those examples out there, and I think that is still something that is untapped. There aren't many good solutions for those kind of things, or at least there aren't many good products out there yet in that direction. And I think it could be interesting to explore. Maybe it's going to be a little bit hard to having a scalable product in that direction, because it's not easy.
Yeah, I think maybe the easiest way to explain it is anything you do, start with the user experience and the user intent, right? Let's say, take the kind of conventional embedded finance use cases where you see a retailer suddenly offer banking services to the customers, right? Why would the customer need or want banking services when they go to buy their groceries, right? Not necessarily a very intuitive flow or something that gives value to the user. But on the other hand, let's take, for example, I want to buy a home, right? That's my intent. That's my primary intent as a person. I want to buy a home. I go on that journey. I find the home. Now, as I'm, looking for the asset that I want to buy, I'm being offered the mortgage as something that will enable me to get my end goal, right? To my initial intent. And maybe as I'm offered the mortgage, I can be offered the mortgage insurance, right? Because mortgage insurance as a standalone, not that interesting. But if you offer it to me within a very contextual flow that follows my primary intent as a user, that becomes really exciting, and there's a lot of value for all the stakeholders, because eventually you just give a better solution to the user, and that's the holy grail, right?
No, I totally agree. I think it's very interesting to propose something like that. I also believe that most of the time we tend to apply the same solutions and the same products, even when it's not needed. So we have, for example, a good white label solution for an open banking product or for a payment solution, and we tend to apply them everywhere, even if it's not needed and it's not always the smart choice. And instead, coming to the AI topic. I think that we are in that specific moment in time when we are almost at the peak of the bubble, in my opinion, because it's so inflated right now. But at the same time, I strongly believe that we're in front of one of those technology that even when the bubble will burst, the technology will remain. I strongly believe that as an enabler, AI is so powerful and so impacting in the day-to-day industry, and in the day-to-day operations, and in the life basically of everyone. So I think that the bubble will pop up sooner or later, but the technology will stay there. I'm not sure about your vision on this one. I'm sure that you saw many different kind of startups under that point of view.
Yeah, I agree with you. I mean, we're not excited about companies that say we do AI for this, AI for that. Like
Hmm.
AI is an enabling technology. And once
Hmm.
we have it, it just enables us to do so much more than we were able in the past. And so
Hmm.
for me, it doesn't have to be an AI company. Sometimes they don't even say anywhere that they use AI, but just like, it's kind of obvious today, right? You're not going to say that you're a cloud-based company because it's obvious, right? That's
Hmm.
the under the hood, how you get to the end result. And so I agree with you in that sense. I think maybe the bubble is kind of around, um, you know, everyone now says they do AI, but I think
Yeah.
the real opportunity is that you're just able to do much more. You're able to
Mm.
take like flows of unstructured data and analyze them in a really powerful way to just know more, to do more, to have to just get to better outcomes. And so again, the discussion is not about what technology you use, it's about what is the end result that you can achieve.
Yeah. Yeah, maybe a more precise question would be, how do you use it in order to gain an advantage on your competition? I also believe that there will be a clear distinction in the future between people that are really, and startups, of course, that are really developing AI, creating their own model, and people that are just using that, because having a small front end running on ChatGPT or on Claude or anything else is not going to be an advantage anymore in the future. But yeah, we will have to wait and see. But what do you think?
It kind of
Mhm.
connects to the initial point though. It's
Yeah.
about, I think the moat that companies are going to develop is by creating very smart products, smart user experience, maybe vertical solutions, maybe um, you know, is using the technology in a really powerful way. And
Yeah.
you're right. I don't think it's about what model they use. And for me, it's not even about if they develop their own model, because eventually that's just going to become commodity. And then it's about
Mhm.
how you utilize that technology to build better products that your users are going to love and are going to be very sticky. And yeah.
Oh, that's interesting. Do you think that is going to impact more on, because this is something that I always wondered. We have a lot of people out there, mostly big corporates and big enterprises, using AI to, for example, cut costs. An example very recently is Klarna, that is considering, to cut great part of their workforce using AI. But at the same time, you have other startups that are using that technology to improve revenue or to propose many different new use cases. So my question is, do you think it's more impacting on the cost side or on the revenue side? Do you think that is a technology that is enabling you to be more efficient or even to have a greater impact out there?
So for me, it's definitely the latter. It's definitely the revenue,
Mm.
the impact, the quality. I don't think the cost cutting and kind of repurposing people or firing people, I don't think that's the real opportunity in the technology. And I think in financial services in general, in many cases, people still want to talk to a human. And so
Mm.
even if you take the kind of the space of long-term savings and retirement planning and all of that, that is a space with a lot of data and know-how. And you could argue, oh, okay, let's take AI and they'll just come up with the right solution and give it to the user. But I think that's an example of a space where when you plan your retirement or you do some things in your kind of long-term saving
Mhm.
products, you want to talk to a human. That's something like very big. You want to know that you're doing the right thing. You want to have the confidence that, someone professional with a
You
lot of
want to be
experience
reassured,
from you.
maybe.
Yeah, and in that sense, AI can help your agent, your broker, become way more professional and give you the angles of the tax planning and give you access to much more relevant opportunities
Mhm.
because of some kind of co-pilot that will help them navigate, but not in order to cut costs and fire the agent and do it instead of them. So I think that's like one example.
Mhm.
But to me, that's the value of AI. It's not about like cutting a salary of
Mhm.
someone.
So where do you see that applied in fintech, for example, in the future? Something that maybe we didn't saw already, not the small chatbot in the application or the customer support done by AI. Where do you see that having an impact in fintech?
So again, the example that I've given, I think, is a really good one, and it applies to other areas as well. It's any
Mhm.
place where you take large amounts of unstructured data,
Hmm.
and you analyze them in a smart way, and then you're able to kind of take a lot of things into consideration, personalize them. You see it with the health insurance. You see it with a lot of other areas where it's about taking unstructured data and making sense of it.
Mhm.
So I think it's almost everywhere. I'm less kind of focused on the things that are like one step further than RPA, that are like about automating processes and forms. I don't think that's the real advantage of the technology.
Hmm. Okay. Well, let's change topic a little. Coming back to your experience as an investor in Viola, how do you actually choose, when a founder has that kind of advantage that, prove the fact that it's worth an investment? So how do you actually choose startups? I'm sure that you actually land on a lot of pitches and to take a look at a lot of interesting ideas. How do you actually choose which one of them, is the right one?
So I think that's maybe the $1 billion question.
Yeah.
And I don't think there's like one formula. I can tell you
Mm.
my perspective on it. So obviously, the most basic thing is to see what problem they're trying to solve, figure out whether this problem is big enough and
Mhm.
the customers or the people that have this problem are willing to pay in order to solve it. That's like the very basic layer. I think that the more interesting one is, are these founders the best people to solve this problem?
Hmm.
And we bake into that the whole perspective of who they are as people, because for us, investing in a company is a partnership. We don't look at it as an investment. We look at it as partnering with another company, with founders, and we want to make sure that they meet the same level of integrity and professionalism and kind of ethics, maybe that we would like to see in anyone we partner with, right? So I think
Sure.
those are like the main things.
And where do you actually find most of those opportunities? Because I'm always talking with young founders that are moving the first steps in this market, and one of the questions that I received more frequently is, okay, how do I actually land on a VC meeting, or how do I actually found a VC investor? So where is your deal flow coming mostly?
So first of all of those people are always welcome to reach out to us. We take inbound and we take every kind of request we get very seriously. But I think, we like to partner. We like to partner with
Mhm.
others, and we work with a lot of other funds and great investors. And so one source for us is kind of collaboration with other like-minded investors that that we want to do something together. We
Mhm.
want to collaborate. So that's one way. And then I think we are very proactive in our approach. So we develop theses on different topics. I've given you some examples now of things
Mhm.
that we've been looking at recently. And as we develop our thesis, sometimes we do a startup map, sometimes we do a research to go along, but then we would just reach out to companies that we think are interesting and try to meet them, try to meet a few, and then decide how to make a bet on the
Hmm.
vertical. So we're not ashamed to reach out to companies and ask them for a meeting and kind of do our intelligence work in order to figure out who we want to talk to.
Well, that's interesting. And which are, given the fact that we stressed a lot the concept of, having founders being able to, solve problems, having those kind of background, this kind of passion. So which are, the main characteristic that you look in a founding team? Like the experience, the skills, or maybe having a strong background, having worked, for example, on a tech company. So which are the things that you are mostly looking at?
That's a great question. I think for me, um, number one is leadership,
Mm,
because it's one thing to be a founder, but the founder is then going to be the CEO or another C-level in the company. And if we look to partner with companies that we believe are going to become huge, we want to see that there is leadership there from the beginning that can
mhm,
help the company scale. Um, and maybe that's a concept that we're kind of taking from the Israeli military, or the DNA that we're used to. But I think leadership is a really important one. Um, the next one would be resilience. And the last one would be flexibility.
mm,
And as part of that, it's also the ability to kind of take feedback as a data point. You might not want to change anything you do as a result of the feedback, but just like understand that feedback you get is a resource, and learn how to use it in a smart way. And as a result, maybe be flexible in your approach and kind of open um, to changing if
mhm.
needed. So.
Yeah, I strongly believe that flexibility is by far the most important one because, things change so fast in this environment that you absolutely need to adapt very, very quickly. But I'm more interested in the first one. So, at least in my experience, I saw a lot of times very great, people with a lot of skills, a lot of knowledge in a specific market that are not good CIO. When they land to be the main chief in a startup, or the main point of reference in a startup, they also need to have that kind of experience of running a business. And from time to time, I found, people that were very, very knowledgeable and skilled in a specific, environment, market, and so far and so forth, that weren't, great manager or great founder in the end. So how do you actually come out to decide which one is the right one and which not? Because it's kind of hard to do that.
I don't think there's a textbook answer to that, because I've seen founders that have been extremely experienced but
Hmm.
still kind of lack the leadership and management capabilities. And then I've seen ones that have been first-time founders, first time in like a real leadership role, and have just like stepped up in an incredible way. I think identifying between the two maybe goes back to the point of why we believe that having operational backgrounds is really valuable as a VC, because we've been in places where we manage large groups of people, we've hired managers, we've been in organizations, and saw what happens when it scales. And so we feel that maybe that experience could kind of lend itself as we try to um, you know, to make the decision. But you know what? It's not popular to say, but I do think that there is a significant degree of kind of gut and intuition.
Yeah, yeah, I strongly agree with the last one. Luck plays a really important role in this kind of decision. No, and you can try to apply the smartest process in the world. You can try to be as more data driven as possible. But in the end, if you are investing in the right trend at the right time, you always land it with a good return. So yeah, strongly believe in this one. Okay, Norm, it was a pleasure to speak with you. I think it was a very, very interesting conversation, and looking forward to see, your next steps with Viola Fintech and what you're going to invest next.
Thank you so much for having me. It was an honor to participate, and yeah.
Thank you. See you next time.